Two people walk into the same bank, same branch, same day, and that bank quietly treats one of them like a wallet, and the other like royalty. The only difference is a number, and here's the part that should bug you a little. It's not a different bank. It's not a different set of rules written somewhere shady. It's the same institution running two completely opposite businesses on the same customer. Depending on how much money you already have. If you've ever felt like your bank is weirdly cold to you, but you've heard rich people say their banker takes care of everything, you're not imagining it. You're just standing on a different floor. So let me give you the whole building. By the end of this, you'll see the exact floor where a bank stops making money from you and starts making money for you. And you'll know which floor you're on right now. Picture the bank not as a counter, but as a tall building. Same logo on every floor. We'll call it the money building. And the first thing you meet isn't a friendly teller. It's a turnstile, a little toll gate at the entrance. To walk through, you tap your card, and the building takes a small coin. Welcome to the ground floor. On the ground floor, you are the wallet. Not an insult. That's just the role the building assigns you here. You're someone who needs to hold money and move money, and not much else. And on this floor, the building has figured out something a little uncomfortable. The easiest way to make money off the wallet is to charge the wallet. So this is where the fees lie. The monthly maintenance fee for the crime of having an account. The overdraft fee when you spend a few dollars you didn't have. The out-of-network ATM fee. Each one is small. Each one is a toll. And here's the first thing most people get wrong about fees. A fee is not a price. A fee is a toll on people who can't walk around it. Think about it. The overdraft fee, somewhere around $35 in the US, only ever hits the person whose balance is close to zero. A person with $10,000 sitting in checking will never pay it. So the building has designed a charge that, by definition, only lands on the people with the least. That's not an accident. That's the floor plan. And there's a second toll on this floor, much quieter than the first. You won't see it, because it doesn't have a sign. Call it the water meter. Here's how it works. You put $1,000 in savings. The bank pays you almost nothing for it, in a basic account, often a rounding error of interest. Then the bank takes your dollar and lends it back out, as a car loan, a mortgage, a credit card balance, for much, much more. The gap between the trickle they pay you and the flood they charge someone else, that gap is the spread. And the spread is the quietest, biggest way the building earns off everyone on the lower floors. So on the ground floor, you're paying twice. Once at the turnstile, where you can see it, and once at the water meter, where you can't. This is where most people live their entire financial lives, by the way. And if that's you right now, no shame, it was me too. Just keep that turnstile and that water meter in mind, because the whole story of this video is watching them disappear as we go up. So let's get in the elevator. Now, the elevator has one rule. It only stops on floors your balance unlocks. Your account balance is the key. You can't fake it, you can't sweet talk it. The building checks the number, and the doors either open or they don't. Tap the button. The doors open on floor 2. This is the first quiet upgrade, the regular. In banking language, you might hear mass affluent. You're not rich, but you've got enough, maybe a steady balance, a direct deposit, a little saved, that the building does something interesting. It starts turning the turnstile off for you. This is where fees begin to melt. Keep a minimum balance, and the maintenance fee gets waived. Set up direct deposit, and another charge quietly disappears. Notice what's happening. The building has stopped trying to earn money by charging you. Now it's trying to earn money by keeping you. That's a different business. You just don't feel the switch flip, because it happens silently, one waived fee at a time. Here's a sentence to hold on to, because the rest of the building is built on it. The poorer you are, the more the bank charges you for the exact same service. Let me say that again, because it's the part people get backwards. We're taught that loyalty and good behavior get rewarded. But on the lower floors, the customer who can least afford a fee pays the most fees, and the customer who could easily afford them pays none. The reward isn't for being good, it's for being valuable. Okay, keep going up. The doors open on floor 5, the guest. This tier has lots of names: Premier, Priority, Preferred. And the moment you arrive, something appears that you've never had on the lower floors. A human being. Who knows your name? This is the first time the building assigns you a person. Maybe not a personal banker yet, but a dedicated line, a priority desk, someone who picks up faster. You start getting slightly better mortgage rates, a slightly higher rate on savings, fewer little frictions everywhere. And here's where you should feel seen, because almost everyone who reaches this floor says the same thing. Banking just got easier. It did. Not because you changed, because you crossed a line where the building decided you were worth being nice to. Now we're going to skip a few floors, because here comes the part that changes how you see the entire building. The doors open on floor 20. The client. This is private banking, and the whole atmosphere is different. The carpet is thick. It's quiet, and you don't wait. Someone walks over to you. You have a relationship manager now, a real one. Their job is not to sell you a checking account. Their job is to keep you, the whole you, your savings, your investments, your mortgage, your business, inside this building and happy. And watch what happens to the two tolls from the ground floor. The turnstile? Gone. Completely. Nobody on this floor pays a maintenance fee. The idea is almost funny up here. But the water meter, the spread, that's where it gets really interesting. Remember, on the ground floor the bank paid you a trickle and lent you a flood. Up here, the client negotiates. They want a loan? They don't take the sticker rate. Their relationship manager gets them a custom rate, often barely above what it costs the bank itself. The spread the bank squeezes out of a ground floor customer? On floor 20, the client squeezes most of it back. And here's the reversal, the thing that flips the whole story. We tend to imagine rich people pay cash for everything. A lot of them do the opposite. They borrow, deliberately, because up here borrowing is cheap, and it lets them keep their investments growing untouched. The same building that charges a ground floor customer a punishing rate on a credit card will lend a floor 20 client large sums at a gentle one. Same building, same dollar of risk, arguably less. Opposite price. So sit with that, because it's the hinge of the whole thing. The lower you are in the building, the more it costs you to borrow, and the less you earn to save. The higher you go, the cheaper it is to borrow, and the more you earn to save. The building doesn't bend toward need. It bends toward wealth. Now let's take the express elevator one last time. Past the numbers. All the way up. The penthouse. Ultra high net worth. And up here the building does something it has never done on any floor below. It chases you. On the ground floor, you chase the bank. For a refund. For a human. For a fair rate. In the penthouse, the bank chases the client. Multiple banks, actually, competing, sending their best people, designing custom deals, inviting the client into investments ordinary floors never even hear about. Up here, the customer is not a source of fees and is barely a source of spread. Up here, the client is a prize, because managing serious wealth is steady, low risk, prestigious income for the bank, and losing that client to a rival is the real cost. So now we can finally say the whole thing out loud, the sentence this entire building was built to teach. At the bottom, you are the product. At the top, you are the client. Same logo, same building, opposite business model. Let me take you into the back office for a second. So this isn't just a vibe. So you see why the building behaves this way. It's not cartoon villainy. It's math. A bank makes money three ways: fees, the spread, and managing assets. On a low balance customer, fees and spread are basically the only levers, and a small balance means small spread. So the bank leans on fees to make the account worth keeping open at all. On a wealthy client, the fees would be pocket change and pointless. But the assets are enormous. So the bank drops the fees, sharpens the rates, and earns from the sheer size of what it's managing. The building isn't being cruel downstairs and kind upstairs. It's chasing the most profitable lever on each floor. The cruelty is just what that looks like from the ground floor. So what does this mean for your actual money on whatever floor you're standing on today? Not advice, just the map. First, those ground floor tolls are the most avoidable money in your whole financial life, and almost nobody walks around them. The maintenance fee usually has a waiver, a minimum balance, a direct deposit, sitting right there in the fine print. Overdraft fees can often be turned off entirely, so a transaction just declines instead of costing you $35. That's not climbing a floor. That's just refusing to pay the turnstile when there's a door 3 feet away. Second, the water meter. If your savings is sitting in a big bank account earning a rounding error, you are personally donating the spread. The same cash in a high-yield savings account can earn dramatically more, We're talking the difference between almost nothing and a few percent on money doing the exact same thing. You don't need to be rich to plug that leak. You just need to know it exists. Third, and this is the honest, slightly uncomfortable one, the elevator key is real. You can learn where the doors are, you can stop overpaying, you can move your money somewhere. It's treated better. But the floors themselves are unlocked by balance. And that's the part no trick gets around. The point of seeing the building isn't to pretend the floors don't exist. It's to stop accidentally paying ground floor prices when you don't have to, and to understand exactly what's being rewarded as you climb. Not loyalty, not goodness, leverage. And maybe the most useful thing of all is just losing the illusion. The bank was never your friend or your enemy. It's a building running the most profitable business it can on whatever floor you happen to be standing on. Once you can see all the floors at once, you stop taking it personally, and you start reading the fine print like someone who knows there's a door next to every turnstile. So here's the map to keep. Same building, every floor. At the bottom, turnstile, water meter, you're the product. At the top, no fees, negotiated spread, the bank chases you, you're the client. And the whole climb in between is just the building slowly deciding you're worth keeping instead of worth charging. If that finally made the bank make sense, if you'll never look at a maintenance fee the same way again, subscribe to the channel. We keep taking the systems that quietly run your money and turning them into simple maps you can actually walk through.